Getting approved for a condo could be easier than you think on this week's Mortgage in a Minute. All right, guys, we're back for this week's Mortgage in a Minute, and you're wondering what my punchline exactly means. And what I'm talking about is condos. See, many of you may or may not know that when you purchase a condo, you as a borrower could pass with flying colors. What do I mean? You send in your loan, you get it approved, your income's good, your credit's good. But what many people don't know is that condos actually need a second layer of approval. See, back in, we'll call them the subprime days, condos were one of the first things to kind of falter, and the regulations as a result of the condos, because the amount of foreclosures that they used to have gotten a lot more tight. So lenders are looking at things like, pending litigation on the property. Do they have enough reserves? Do they have the proper insurance coverages? And some of these things, unfortunately, can kill a borrower's ability to purchase a condo. So if you're purchasing a condo for a primary use, you're using it as a vacation home or an investor, there's some things you want to know. So we've recorded some other videos. Head on over to our YouTube channel to check out how to qualify for condos. But today I want to break down the difference between a full review and a limited review. So if you're worried about qualifying for a condo, there's something actually called a limited review. See, when you purchase a condo, typically you put the minimum amount down, you have to supply things like an appraisal, which you need on all files. You need insurance, right? Master insurance policy to make sure that the association is covered properly. You need a condo questionnaire, which is going to look at things like what is the occupancy ratio for investors versus primary owners. It's going to look if there's pending litigation or any lawsuits on the property. It's going to look to see if one investor owns more than a majority percentage of the properties in there. All these things could potentially be red flags, right? So when you do a limited review, that documentation is reduced. And in order to qualify for a limited review, of course, it depends on the product you're doing, but you're gonna have to put a larger down payment. For instance, purchasing a primary residence here in Florida by putting down 25% or a 75% loan to value will allow you to qualify for a limited review. And during that limited review, they're going to limit the amount of documentation. So things like an appraisal, master insurance policy, and a few other small items will be required, but it'll limit the amount of documentation, which again strengthens your ability to purchase a condo. So the next time somebody tells you that condos are hard to qualify for and you've got a nice down payment, well, let them know that they don't know what they're talking about and head on over to Home First Lending to see if you qualify. All right, guys, we'll see you back next week on another Mortgage in a Minute.